Hello, and welcome back to Explain the Charts. Today is April 8th, 2025, and we're taking a look at the USDCAD pair, combining both fundamental analysis from recent news and technical analysis from the charts. Recent news suggests that the Canadian dollar is showing resilience, trading near a 4-month high against the US dollar, despite some global economic uncertainties. We'll examine how factors like oil prices and interest rate differentials between the Bank of Canada and the Federal Reserve might be impacting the USDCAD pair. Now, let's switch over to the charts and see what the technicals are telling us. Looking at the daily chart, we can see a long-term overview of the USDCAD's price action. We've had a broad trading range over the past several months, with price bouncing between roughly 1.30 and 1.45. More recently, we've seen a downward trend, suggesting the Canadian dollar is gaining strength against the US dollar. Let's zoom into the more recent candle data from the start of 2025 to today. Focusing on the recent price action, we can see a series of lower highs and lower lows, confirming the bearish trend. However, there seems to be a bit of consolidation lately. It's testing the 1.42 area, and previously, there was a drop all the way to 1.40. It is important to see if it can sustain these lower levels. If the pair breaks below 1.42, it could signal further downside, potentially targeting levels around 1.41 or even 1.40, as mentioned in some technical outlooks. A break above 1.43 might suggest a potential reversal. Now let's dive into the hourly chart for a closer look at more recent price action and intraday dynamics. Switching to the 1-hour chart, we can see more granular details of the price movements, particularly around today and the last few weeks. The intraday bias seems to be neutral, and the momentum appears to be consolidating. We are observing the prices trading in a tight range. It could be interesting to gauge institutional trading positions as well. Looking at the 15-minute chart, it is clear that there was quite a large drop yesterday and today. Currently, it seems to be bouncing around a bit, but overall a pretty choppy market. Let's narrow the candles down to the past couple of days for more detail. Reviewing the past couple days, we can look for any potential support and resistance lines to watch. If the price continues to stay above 1.423, then we might expect another retest of the 1.426 level. If the price breaks and stays below 1.423, it could be looking for another test to the downside, potentially at a level near 1.420 or even as low as 1.418. Okay, let's quickly recap the key levels and potential scenarios. Key resistance sits around 1.426. A break above could signal a test of 1.43 and higher. Support is around 1.423. A break below may signal a test of 1.42 or 1.418. For a bullish scenario, monitor oil prices and any hawkish statements from the Bank of Canada. Bullish momentum can retest 1.426 at a 60% likelihood and potentially reach 1.43. Conversely, a bearish outlook would rely on stronger USD data or dovish BC comments, potentially breaking 1.42 and moving to 1.418 at 55% likelihood, or even as low as 1.41. Keep an eye on upcoming economic data releases from both the US and Canada, as they can significantly impact the pair. Pay close attention to any news regarding trade relations or geopolitical events, as these can also introduce volatility. Remember, these are just potential scenarios, and risk management is crucial. Thanks for watching Explain the Charts.